All right. Good morning. Good morning. Thank you so much. We are doing another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. How are you?
I'm doing well, man. I love it. You got all dressed up for us. I love the sports coat.
I did. I figured I looked in my closet. I got these jackets back when I had a job, so I might as well wear them once in a while.
I love it. I love it. So today we're going to talk. So we're going to do a recap. It's for Friday, January the 28th. And so let's get right into it. PCE. What is PCE and what happened there?
Yeah, so PCE is important for all of us to understand because it is the Fed and Jerome Powell's favorite inflation indicator. If you'd be living under a rock to not know that we have inflation, we have CPI, PPI, all these other metrics. What should matter is what is most important to the Fed, and it is PCE. It came out on Friday today, and it is the worst on record, worst I think since the 80s. So inflation is bad. It is getting worse. The Fed acknowledges it. We heard last week that the Fed's going to raise rates because of PCE and some other conversations this week. Something that I have been calling for 4 or 5 months now looks more likely. If you've been following my daily content, you know that I believe the Fed will have to move a 0.5 point in their first move in March. Before this week, the odds were 1 in 20 or 5%. As we end the week, they are now over 1 in 25. They're actually 30%, so not quite 1 in 3. It is coming. I think the Fed's going to have to shock the system. Inflation is bad. It is getting worse, not better. And that's going to have ramifications in real estate, cars. I mean, it's here, and the Fed's got to act, and they're going to act in March. So get ready.
So get ready. Here it comes. So let's talk about in terms of the stock market. What did you see this week in the stock market?
The stock market's interesting, right? This is usually when companies report, it's very much how'd you do, like what was last quarter. We potentially are exiting a bull market, entering a bear market, and it's almost not important what happened in Q4. Not important. It is instead, what is your forward-looking guidance? Some companies like Microsoft gave great guidance and did well. Some companies like Netflix or Robinhood or Peloton gave horrible guidance and did bad, right? When you see Netflix fall 20% in a day, that has nothing to do about Q4. It has everything to do about the next quarter. So again, your rear view mirror, to use a car analogy, is this big, but your windshield is this big. So people are looking to the future, and people are seeing potentially a difficult year. So yeah, pay attention, buckle up.
Buckle up, buckle up. So let's talk about interest rates. What did you see this week in interest rates?
Man, interest rates are moving. They're moving fast. They are going to have ramifications in housing and real estate. We'll get to that next. They're now even impacting the non-QM space, right? The non-QM and non-qualified mortgage. They are not tied to the Treasury. They are tied to Wall Street and their securitization. They're now even moving rates higher. So it is happening across the board. If you want to borrow money today, it is more expensive than 2 weeks ago, whether that's housing, non-QM, or anything. So debt is going to get more expensive, and that will reverberate through the economy.
That will reverberate through the economy. I want a follow-up question, something we talked about that I feel like the last 2 or 3 weeks we talked about. There's probably a 6 to 8 week cycle because of low inventory, and we're going to talk about inventory in a minute. Do you feel, even with the interest rates moving the way they are, there's still a 5 or 6 weeks left in that cycle that things will still be a little tight, still maybe strong pricing?
Without question. I mean, one thing you've learned when you study the consumer for 30 years is they move, and they move together. So what is happening right now? If you were shopping for housing at all last year and were held out because of whatever reason, now interest rates are moving and you still want that new house, you are moving right now. I have heard from agents in the last week about another April, and you and I are in the business in April. It was a crazy time. It's happening again. Unfortunately, it's happening again in an environment where inventory is even lower. So yes, we're going to have Q1, just generically speaking, it's an environment of low inventory and people want off the sideline. So I expect one last hurrah, and then the market's going to start slowing down.
Very interesting. So going into the market, let's talk about housing. Let's talk about inventory. What are your thoughts there?
Yeah, so this is, people got to hear when I say slow down what I mean, because sometimes people hear this and they don't know me, they don't know my daily content. They think I mean crash. Real estate is not the stock market, it is not crypto. What is going to happen is we're going to have a washout. We're going to have everybody that wants to buy a home in Q1, probably overpay, probably regret what they're buying just because they're rushing. Anytime you rush, it doesn't always work out. But as we get into Q2, Q3, Q4, higher rates mean less yes answers from banks. Rising unemployment means less people feel secure. So we are going to see a fall in transactions, not a fall in prices, right? There is a disconnect. Even when rates went up, they doubled in the 80s. Transactions fell, but prices didn't because wages were going up. So again, I do expect transactions to fall this year, certainly Q2 through Q4. Q1 will probably fall, but that's because of inventory. But I think the good news for investors like me is the market will finally slow down. I will be able to find a motivated seller in Q2, Q3, Q4. And I am so looking forward to that. I don't like making decisions in 7 minutes. I look forward to see what's coming. Again, I'm not calling for prices to decline. They're going to plateau. We see amazing growth the last couple of years. It will not continue, but that doesn't mean a crash. Just because we stop going up doesn't mean we have to go down. So yeah, I'm excited by what's coming, but Q1 is going to be pretty busy.
I would agree. I would agree. And thank you, Michael, everything that you share. Also, by the way, I just want to say for all the viewers, Michael absolutely crushed it at the Ascend event. It was such an honor and privilege to have you there, Michael. And I got to say that in terms of the way you connect the dots, the way that you pull ideas and thoughts together in a very simple and in a way that people can go out and actually take action and actionable steps. Just thank you for all that you do for our community, Michael.
No, it was an honor. I look forward to being in person next time.
I love it. I love it. So again, a lot of you, we gave away, I want to say we gave away about 40 or 50 books in the last quarter to people that are a part of Foundation Builders, people that are a part of the Ascend event, people that are a part of the Evo community. So we've got the 2 different books here, one rental at a time, and then also conversations with real estate millionaires. If you've received the book, please go to Amazon, give this man a 5-star review on one or the other or both. And then also, Michael, where can they get more information about your course?
There's a link below on my channel, or just go to onerentalatatime.com. It is there, and you can also check out all these great hats and do the work stuff.
I love it. I love it. One last thing I want to ask you. NFC Championship, San Francisco 49ers, Los Angeles Rams. We got a huge following in the Southern California market. Ironically, we still have a lot of Niner fans from Southern California too. So obviously you and I are both Bay Area guys. Niners versus the Rams.
Well, you're a Bay Area guy. I'm a mile from the stadium. I can't pick anybody but the 49ers. And boy, my dad would disown me if I picked anybody but the 49ers. So go Niners.
I love it. I love it. By the way, we are in the business of handicapping and underwriting real estate, not football.
No,
it's
not
just
at
fun
all.
to throw out there. So
yeah,
I just want to put a disclaimer.
I'm not a Garoppolo fan. I think he's an overrated quarterback, but I love the defense. And our running backs are good. So hopefully Garoppolo doesn't make a mistake.
I love it. Okay, guys and gals, thank you so much, Michael. Thank you for all that you do.
Take care, man. Bye.